Good evening and welcome back to Be Rich. After Bahrain, my team had a brainstorming session. The idea was where to do an event. So we thought we had done enough in Gulf and we'll take a switch. So the team decided to do an event in Singapore. We are going to do an event in Singapore in the last week of August. Those desirous of meeting me in Singapore can send a WhatsApp to the number given below or drop a mail. My team will be in touch with you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. The small cap stocks we are speaking about in this video are exclusively related to the US and not those in India. We hope there is no confusion in the rest of the video. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be talking about the small cap index in the US, which we've touched upon lightly before. But today we thought that we'd give it the treatment that it deserves and see what's happening in the US. So first off, let's see what has happened in the past week. Let's take stock of what's happening. First off, we see that the S&P 500 has underperformed the Russell 2000, which is the small cap index in the US. And the Russell 2000 has gone up by 9% in the past week. And that's a tremendous gain it has posted after about almost half a year of not going anywhere. Because people were still, or rather investors were still doubtful on whether interest rates would come down. But once the cooling inflation data had come in, where CPI had come down to 3%, people were a little more optimistic about the small cap index in the US. But before we go to that, this outperformance, there are many possible reasons for it. Let's look at some reasons as to why this might not be something structural going on, but rather something temporary. These are some of the reasons. One, it could be a one-off event. It's possible that this is some experts have said that this could be due to call option activity, but so there are two things which you can do with options. You can either buy them or you can write them. So if you write a call option, that means you are giving out a contract, letting someone exercise the right to buy your shares at a certain price, and they pay you a certain amount of money to exercise this right. And those who actually put up call options will end up having to buy the stock as and when the stock price increases in order to meet the requirements for writing call options. So this could pretty much just be a tiny movement in the Russell 2000 after many months of underperformance, leading people who wrote call options very confidently before having to purchase more shares in the Russell 2000 in order to make sure that they fit the requirement, which could have pushed or rather catapulted the index up by 9%. This is possible because there are some experts who have greater access to financial data like the Bloomberg terminal who are writing about this. But I'd like to think that that cannot be the only reason why the Russell 2000 has gone up by so much. I mean, there has to be something else, right? 9% is not a small movement. So let's also look at some other cases in the past where this has happened. Very recently, in the Christmas of 2023, that is 25th of December 2023, we saw just post-Christmas, the small cap index basically rallied. And it rallied because a lot of people were hoping that Jerome Powell would give them an early Christmas gift and give you a rate cut, which did not pan out the way they wanted to in the upcoming year 2024, which is what we're in. It did not pan out the way they expected it to. And the index again deflated. But there was a little bit of hope when the rally happened. So this could be another such case where dreams are dreamt and they're crushed shortly after due to some other news coming in. This could be the case. Regardless, it's important to note that any information stating that slowing interest rates or interest rates being cut are going to be delayed, that is, any rate cuts in the future are going to be delayed, has the power to take away the air or whatever little air has been filled into the Russell 2000 index. So that being said, let's look at some of the macroeconomic data which might be pushing the Russell 2000 up. So, one important piece of data is the fact that the CPI has fallen down to 3%, and the 1 month average is actually less than 2%. It's somewhere slightly below 2%, and the 3 month average is slightly below 3%. So, you have very positive data which you can see in terms of inflation data, which makes market participants hopeful that there should be an interest rate cut upcoming. And another point to add, okay, I've told you that inflation has come down, interest rate cuts may be abound. What does this have to do with small cap? Well, I'm glad you asked, because small cap greatly benefits from interest rate cuts, or theoretically are poised to benefit from it, because small cap companies generally tend to have a lot of debt. Because these companies don't generate a crazy amount of free cash flow, especially through raising, and they don't raise capital much through market listings, they end up making most of their capital requirements by borrowing. And when they do borrow, there's a report which states that over 40% of the capital is being utilized in small cap companies from debt. And this debt is generally taken on a free floating rate, which means that the rate on the loan which they take fluctuates along with the Federal Reserve rate. And what we end up seeing is that a higher rate means that they pay a higher amount of interest on their borrowing. A lower rate means that they pay a lower amount of interest on borrowing. So in 2021, interest rates were near zero. We saw that most small cap companies were not paying much of an interest on their loan. So most of the money was going into the principal. However, today that does not seem to be the case. But if interest rate cuts are to be expected, we should see easing of the balance sheet in a lot of these small cap companies, especially the ones which are loss making. This is going to be a big second wind which they can expect if it does come at the rate which the markets expect. Right. Secondly, there is something known as the Trump trade, which has been making the rounds in financial markets as well as in topical news websites such as The Economist, the Financial Times, Wall Street Journal, and these assortment of newspapers. We see something known as the Trump trade, because Donald Trump is someone who has very openly said that he's pro-business, and he said that he's going to give big corporate tax cuts. And these are going to be meaty, fat cuts, which he's going to give these companies. At least he says, he claims. And he says that he's anti-big tech. So small caps are perfectly poised for that, because these companies are not big tech, and they are set to gain from the money which will be poured from outside big tech into these sort of mom and pop companies, or even the smaller ones. And an interesting thing to note is that out of America's 3,000 largest companies, the 1,000 largest of them control 95% of the total market capitalization worth. This is very interesting. And it tells us that there's a huge concentration in your top 1,000 companies and even your top 10 companies in the S&P 500, where Apple, with its market capitalization, is more than the bottom 2,000 companies out of America's top 3,000 companies summed up in market capitalization, which is to say that 2,000 of the smallest companies in the Russell 3000 index summed up in market capitalization still is lesser than Apple's single market capitalization. So there's a huge amount of concentration. And today, some of that capital may flow back into small cap stocks if the Trump trade comes about. Let me elaborate more on the Trump trade. One, corporate tax rates are going to be cut. Suppose they're going to be cut. Then we should basically see small cap stocks basically have a field day where they don't have to pay so much corporate taxes, because companies like Amazon are anyway not paying much corporate taxes. So the benefit which they get from something like this is not as much as a company which is unable to avoid paying corporate taxes, like a very small cap company. Secondly, tariffs are going to be risen. And when tariffs are risen, what we will see is that goods which are imported are going to be reduced, because obviously imports become more expensive with tariffs. And we should see local producers and local manufacturers have a little bit of a boost in their demand, as people will now have to consume locally. And another important thing is that export companies like big tech, which have huge markets abroad, are going to face a big hit. So the Trump trade favors smaller homegrown companies, rather American-based companies, domestically based companies, rather than those which export abroad. But there is a second aspect to the Trump trade, which is that because he's issuing so many corporate tax cuts, supposedly, theoretically, we should see revenues come down. And if revenues come down, he needs to borrow more. And if he needs to borrow more to meet his deficit, this will basically mean that the interest rate should go up because of a crowding out effect. And if borrowing costs go up, this should definitely affect small cap companies. And inflation should also go up because there's more spending in the economy now as money is being distributed back to different people. So it's hard to tell it's like a tug of war where higher borrowing costs on one side and lesser taxes on another side. It's going to be hard to figure out where to place the final ending point. But it is definitely true that small caps may face a good boost when Trump is to come to office. And moreover, the S&P 500 today is already standing at a PE of 25, whereas the S&P 600 small cap index has a PE of 16. So 18 today after the rally. But the point is that we should see the fact that you have better valuations in one index than the other. And then it becomes a question of where would you like to poise yourself? And it is true that the bigger they are, the harder they fall. And that's basically what is my opinion. What do you think about this?
Well, I think it's hard to, as a small-time investor, and looking at small caps, with all what you said, there's a lot of uncertainty there. And now that it's already up 9%, that's the index itself. That means some individual companies will be up really somewhere.
Yeah.
To push this index up 9%. The companies of value, that is, would have already sort of reported. So I'm sure they're feeling a lot of FOMO. People are looking at these stocks. But my advice would be to steer clear and to wait it out to find out what happens in the election, especially if you're domestically investing in the US. And it's better to wait it out because we all know politics on paper is one thing, but in reality, when people actually go to vote, it's another thing. And most elections are decided in the last 2 days of polling. All these things happen months and months ahead before polling. But most elections are decided very funnily on the last 2 days of polling and what happens and what news cycle is playing out on those 2 days. So it's very difficult because the elections in US, though when we say it, it's 4 months, 5 months away, may not seem long. But in politics, 4 or 5 months is a lifetime. So even events like what happened to Trump tragically, and it's already phased out of the news cycle. So things like that at my time, meaning when I was short, it would be on the cycle for a very long time. It will be spoken and dissected and will be discussed in all kinds of conversations. But this day, news cycles are so short, it doesn't even stay in the cycle for more than a beat. So with this kind of frame of reference we are having, small cap stock volatility is very high. And yes, numbers are good. We are expecting the Fed to move, but it hasn't moved. And like Anand says, it's just not one cut which we need. We need a series of cuts to happen. And will it happen in quick succession, or will it be played out, or will it be long pauses between them? It's very hard to see. And we still, as far as inflation is concerned, in the US, lots of things are contributing to the inflation. It is just not domestic consumption. It is also the strong dollar and imports getting cheaper to the US. All these things are contributing. And we have to wait and watch to see what happens. And the posturing taken by Russia and China and them cozying up with North Korea, it's not good news, geopolitically at least. And we'll have to wait and see how this all plays out the next 4 or 5 months. And since US is in a vulnerable position because it's in the middle of an election cycle, people like Russia and China will take advantage of this. And they would love to disrupt markets, especially China, which its own domestic economy is going through the ringer, would love to lay a few blows on the Western economies just for good measure. So we'll have to wait and watch to see what happens. And because of the volatility, and like you rightly said, the nature of small caps are companies which are starting to grow.
Yeah.
They're trying to hope to capture the imagination, become a medium cap, and then become a large cap.
Many of them are loss-making.
Yeah. So their hope is that their product somehow catches on, that the public sees a reason for them to exist, and it latches on and it zooms. Even all your Googles and Microsoft started as small caps. So it's very hard to see. For every one that turns to a large cap, 1,000 fail. So I would be very cautious when it comes to small caps. Though it might seem there's lots of money to be made there, I'd be cautious while trading. That's my outlook towards it.
So there we have it. We have two opinions, most of it aligning with some differences. We hope you enjoyed this segment. And if you like this video, please like and please subscribe to this channel. And if you think your friends and family could get some value out of watching this video, then please share it with them and leave a comment if you have something to say or any other suggestions regarding content to be posted in the future. Thank you very much for joining us on Be Rich.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.